Hello guys, today is Saturday. We are 10 o'clock p.m. Eastern Time. So as usual, we begin our live. So hope the voice and the video is good for you guys before we begin. And as you might know, the subject of today is tips and tricks on losers and winners on trades. Now, in this live session, I will try just to explain a lot of things related to losers and winners, because there are a lot of myths, a lot of misconceptions, a lot of opinions that are false, and these opinions you find them on YouTube a lot, and a lot of people, they think that these are facts, but in real they are not facts. They are just things that are misleading. Okay, and we will be talking about this losers and winners. So Rahmatullah Modi, hello Rahmatullah. So I will try just to not talk too much tonight. We try just to give you some information. Now, a lot of you guys, when you go online and you see people online who are doing teaching, and they claim, they say, I have made 75% winners, or 80% or 90%, or some people they say we never lose, like this stuff. Now, even باكيتو صح عيدك بلاد وكل عام وانتم بخير، او العيد راه بالحد، العيد راه بالحد بعد الصلاة. انتوما دوكا مازلتو ما صليتوش العيد، صافي دير مازال العيد، يا بكيتو تلحقهم. So sorry for this between brackets, it's another language. So as we have said earlier, that there are a lot of ideas, a lot of opinions. You see them online and you think that these things are facts. Hello Jocelyn, how are you? You think that these things are facts, they are true things, and if we follow them we make money, but in the truth you will never make money from this kind of things. Hello Fabian, how are you? Bakito said no, not we. So Fabian, hello Fabian. So I'm telling you something. You find someone saying, for example, I have made 70% of winners. It means 25 losers. It means that he is making money. But this is not necessarily true. He might be having losses, and he might be making no money, but he loses money. So the idea of 75, let's say this guy has done 100 trades in a year. Like in swing trading, it could be 100, 200, 500, 1000, depending on how much stocks you bought and sold. So in swing trading or in day trading, it's the same. So we will see. Now we try to explain what is a winner. Okay? Because the definition of winner, this is the problem. So if you, for example, I say to you, you have made a trade, you say yes, I have made a winner. And I ask you, how much money do you make? He said, I make $1. Just an example, okay? $10, $20, $100. So depending on how much money you have, let's say you put $10,000 in a trade. The stock goes up, goes down, goes, okay, whatever it goes, and then you sold it. Although you have made money, but this, in real, if you have not make good money, this, it is called winner, yes. But in real, to make money, no. Okay? Jocelyn said, red eyes, my friend, you work too much. No, I sleep too much. I sleep too much, not I work too much. You know my work today, 2 hours that I do with you, like a live and explaining this is my biggest work in the week. In the whole week, I don't do nothing than searching for stocks if I want to. This week, in my portfolio, I change only one stock. When I see my stocks are doing good, that's it. In our live, in our trading account, this week, I sold one stock and I bought replace it and another one. So the whole week I didn't do nothing in our trading account. You see that? So my eyes are red is just because sleeping too much. That's why I have always my coffee. Anyway, and here, Jocelyn, here we are at hot weather today. I don't know, it's 85 or 90. I know the weather in Canada is not that much, but here it's too much. Now, let's continue with the subject. We said that a winner. When we say a trade is a winner, not a loser, it's a winner. The definition, any trade that you do up, even if it is $1, it's called a winner. But in real, if you are making winners that have little money, this will change your account from a winner to a loser, because in real you are not making money. Okay? There are some people who can just buy a stock even for a few minutes, 1 minute or two. He is agreeing with $1, $2, $5. He can sell it and he is a winner. And in the dashboard, because some people they like to show their dashboards, and they say, oh, I have 70 winners, only 30 winners that are losers. But this doesn't mean that you are making money. And this is one of the problems that people face, because they don't understand just the simple thing, which is the difference between what is it a winner. Okay? Now, let's go now to the opposite side, a loser. Okay? If you lose even $1 or $2 or $5 or $100 or $200 or $1,000, all these are called winners. But there is a difference. There is a difference between when you lose $10 or $20 or $100 and when you lose $1,000, $2,000. Now I'm speaking about the same amount of the trade. For example, let's say you have you put $10,000 in a trade. Just an example, okay? Let's say one of the guys, we have, for example, 3 guys or 5. So when they lose money in a trade, all of them are called losers. If someone, all of these guys have bought a stock, they put $10,000, okay, $10,000 in one trade. A stock, they buy a stock, and each one of them they buy a stock. Suppose that all these guys suppose that all these guys they lose money, and their trades, whenever it is minus, it is in red, it is a loser. But if I ask you the question, if all these people put $10,000 in each stock, if someone has lost from 10,000, he lost $100. Someone has lost $500. Someone has lost $1,000. Sometime and another guy has lost $2,000 or $3,000. All these guys, they have made one loser. But understand that this loser, all these traders are not the same. Okay? In order to explain this very, very well, in order to understand this, I will go and open the thing, explanation thing, and let's see if we can explain that to you guys. Okay? So just to make it clear, so we have winners. Here we have losers. Okay, so okay, if we have one stock and you put $10,000, okay, in this trade, so this is just an example, okay, this is just an example to show you, okay, so winners and losers, okay. Now let's say we have 1, 2, 3, 4, 5. Here we have 1, 2, 3, 4, 5. Okay? So let's say one guy has made from one, it's only one stock, okay, one trade. Let's say he made $100 and he made $200. He made $500. He made $2,000 and he made, let's say, $200. So all these trades that this guy has made, all they are called winners. But $100 is only 1% of this $10,000. 200, it is 2%. Okay? And 500 is 5%. Okay? 2,000, it's 20%. 200, 2%. Okay? Now we do the same with loser. So 100, 200, 5, or let's say 500, 2,200. Okay, so 1%, 2%, 5%, 20%, and 2%. So these are the winners, these are the losers. But understand that this 100 here and this is one loser, they are not that much. It's only 1%. But it is called the winner. Okay? And here, losers also, 100% lost. It's called the loser, but it is just little. Here it is little, and here it is little. Okay? It's not a big deal. Now, the main thing in trading is to make some percentage in high. This is how you can make money. When a trade you do, for example, 20%, you do 10%, you do 30%, you do 50%. These are the trades that are called trades. But this one, if you compare it to this one, between $1 or 1% and 20%, there is a big difference. But in real, those people, they say it is two winners. Now, as you can see in terms of price, these two, they are not two winners. Although it is a winner, like when you have a definition that it is you are on green. It doesn't mean that when you are in a green that you are a winner. Okay? So, in order to prove you this, I give you a proof now about how a person, okay, how a person will make a lot of winners. I give you an example of this 75 winners. 75 winners versus 25 losers. So, in real, the people, when they say 75 winners and 25, it doesn't mean that this is good and this is profitable. Okay? This, like when you said, it is profitable. Okay? That the guy is profitable because he has made 75. 75, if he has made only 2% in 60 of them, in 60 of the trades, he has just 2%, 3%, 1%. You know, with little money, it's not a big deal. Okay? So, if this guy here, it means it's the same guy, he has made 25 losers. If this losers, he make 20% of his losers, and he lost a lot, like 20% of his money, you will understand that this guy with 20% of losers, 20% of his money, now 20% with 20 trades. Or let's say, I give you a round number. Just I give you a round number, not to do a lot. Let's say 25 trades. 10 of them is 20 loss. 20% loss in each money. Okay? So, if he has done 10, do you understand that he will wipe out his account? Okay? He will wipe out his account if he has done he lost 20% in 10 trades. 10 trades. Let's say he put $10,000 in a trade. He lost 20%. Now, how much money he has in one trade? Okay? So, he will have 8,000. Okay? So, this is his money. 80, no, not 80,000. Sorry. He has $8,000. This is the first trade. If he does the second trade with 20%, second trade, he will have $6,000. The third trade, he will have $4,000. Do you see the problem with these losers? Although he has made only, I'm just giving you a number here. So I say 10, but let's say just 3 of these bad trades, he lost 60% of his money already. It means from 10,000, now he has only 4,000. It means he has lost 60% of his money. So you see, even though he has made just a few losers, he can lose all his money. He is not profitable anymore. So this is the proof that when you say I have losers, it depends on how these losers look like. Now, when we have profitable trades, you should see how they look like. Are they big winners or they're small winners? And this is the problem that most of the people they get into, thinking that if you do 75% profitable trades, that means that you are profitable, which is not the case. So the main thing when you are into your account, okay, you should see what are these winners and what these losers look like. Okay? So, I think from this simple demonstration, okay? From this simple demonstration, you understand that the difference between winners and losers is not that big. Okay? It's not that big. So, the most important thing when you make losers, you should see, are they big losers or small losers? Now, if they are big losers, now what does it mean? It means that your account will be going down and you are not profitable. You are a loser. And you see that your account is going so fast down. Okay? Although you said that you have made a lot of profitable trades, 75 trades that are profitable. But in real, they are winners, yes, in terms of definition. That if you are green, okay, as I told you, if you are green, let's say you have made a trade, $10,000, you bought a stock, but after a few days it goes up, it goes down, and then you decide to sell, and you see that you have made $100. $100 profit, it is called a winner. But in real, is this a winner? If you continue like doing $100 each trade for 10 times, 20, 30, 70 in the whole year, you are not going to make any money. Because if you, on the other side, you lose 10%, 20%, 30% in some trades, all your profits will be gone and you will be down. That's why, hello advanced trader, that's why what I tell you guys is that these probabilities of trade between losers and winners, you should take care of. He say advanced trader likes, I like the blue. Ah, the blue, yes. I like also the blue of the sun and the beach. You know, it's summer right now, so we should think to go to the beach for some while. It's very good. Now, so as I told you guys, when you think about your account, okay, sometimes you will be doing something wrong for many weeks, many months, and sometimes many years. You should see, for example, if you are seeing that you are losing money, you begin to see your account shrinking. But sometimes you make trades, you make winners, as they say online. And some dashboard they give you, they say you are good because you say it's little cold in New York City. No, man, here it's like 85 or 90. In North Carolina it's hot, so it's very good for us. People are going to the beach these days, man. No, I can't live there in New York. No, I don't like snow and cold. So the best thing that you should always think about is you take the management of your account very, very serious. If you are making big losers, you should stop that. This is one of the best thing I tell you. Now for us, like those who follow me, like in the trading account or in my training, if you get my training, all is available, like how to manage the account, what to do, and the other stuff. So there is a strategy you should follow in order not to be a loser. Because a loser is a choice. You choose to be a loser. And you say to me, for example, why? Why should I choose to be a loser? What's the problem? The problem is that you don't have a strategy, and you see that you are losing too much, and you continue losing too much. Okay? Without doing anything. Now, after a while, after a few days, few weeks, few months, and 1 year or 2 or 3, most of the people, even if you have big money, you bring $50,000, $70,000, $100,000, $200,000. You have a lot of money, but you fail to manage your account according to the rules of trading. So since you fail, you begin just to trade and you don't know what you are doing. And then you don't know why you make many good trades, but your account is still going down. Okay? Advanced Trader said, Kareem, are you gonna bring new info to the room? So, Advanced Trader, if you think, I'm just telling you the truth, if you think that you are staying here and you don't get anything, information, or if you know anything, I think you should go to some other place to watch a movie. Okay? I'm not doing here like entertainment. So please, Advanced Trader, if you think the statement that you said is too bad, okay? I am not reading books and coming here to tell you what you should do. Okay? This is from my training. This is for what I do in life. So if you think that you know everything here, I just tell you to go somewhere else. Because, for me, I am a very polite person. But when someone begins to play with his tail, I cut his tail here. Okay? Now, let's continue. Because for me, even if I have only one who is watching me and following my suggestions and my training, it's better than to have 1,000 or 10,000 who are not interested. okay? Because I'm not doing a movie here. So if someone is thinking that this is a movie here, you are wrong. I am not for entertainment. I am speaking about business. I'm speaking about something which is serious. And this is what makes the people money. If you don't know, you think that you know, but most of the time you don't know. If you are still losing money for 1 year, 2 years, and you are trading and you are still losing money, this is what I'm talking about. This is the solutions I'm talking about. But people, when it gets to the work, people, they get lazy. They think carrying a business like trading is not a business. It is just magic. You do this, you don't do that. Jocelyn said, well, I think you are very entertaining and interesting. Thank you very much. But I know, Jocelyn, I know when you say entertaining and interesting, this is because you follow me and I know you are my student. But I'm thinking about other people who they think I have a magic formula. Just I tell them like a magic formula that they should drink like a juice, you know, in a cup. I might be in the future selling like a bottle of juice. A bottle of juice, and in this juice I have all my magic formula. You just drink it and you become profitable next day. Okay, so thank you very much, guys. Now let's continue, guys. Okay, so why when I say always about, do you know that in my training, the most training that people they don't buy, it is those training that they make the money. Because making the money, it's not only where to buy or where to put stop loss or where to exit. This is not. There are other things more important than that. And these things, the people who want to learn, when they control, they master their trade, they master their account, they will be very cautious. If anything turns to be bad, they will fix it right away and check what's wrong. Okay? That's why most of the people, when they, especially those people who try to trade like whatever, they trade always the same thing, and they don't get interested in anything, then just buy, sell, buy, sell, buy, sell, buy, sell. They make some winners, they make some losers, but although they make more winners than losers, but still they fail to trade good and they lose money. This is the subject of today. Now, this subject, I know it's a boring subject. I know it's boring because you need to understand and practice. It needs some work from you guys. For me, why I said I don't work that much in trading, because I take care of the management of my account. But buying and selling is so easy for me. It's just I search, I find the stock, I buy it. Okay? If it goes good, I stay. If it doesn't, I sell it and buy another one. These are the rules of my strategies. Now, managing the account is more difficult. It needs time. It needs to see what's wrong in your account. What's wrong? Because I'm giving you an example. Okay? Let's go to the thing again. Let's go again to explain. For this, I will just. Okay. For this, I will just give you an example. You made 10 trades. Okay? You make 10 trades. Each trade, you have made 5%. Okay? So here you have made trades 10. 5%. So what does it mean? How much money you make? 10 trades, 5%, you make, in general, you make 50% of your money. Okay? 50%, it means 10,000. Now you have a $15,000 after these 10 trades. Now this is 10 trades, okay? This is what we make. But now let's say these 10 trades, you did them in 3 months. Just an example, okay? You bought and you sold, 10 trades. We are doing here swing trading. I'm not speaking about day trading. You can do day trading also, but we are speaking about swing trading. Now the losers, you do 5 losers only. So at the beginning, when I say to you 5 and I say you 10, what do you think? You think that this guy, or you or me, you think that you are profitable because you have $15,000. 5 losers, okay? Now, 1 you lose 20%, 1 you lose, 2 you lose 10%, 10%, okay? Then you lose another one, let's say 25%, and then you lose someone 5%. So these are only 5 trades. 5. 1, 2, 3, 4, 5. Okay? Here you lose, you make 10 by 5. So here I don't give you a lot of things like this, just to understand the idea. It doesn't matter the thing. Okay? So 20 plus 10, 30, 40, 65, 70. Now, you have lost 70%. This is just an example, okay? Just an example. You lost 70% in your losers, although they are 5, but you lose 70. 70% out of 10,000, okay? How much is it? It is 7,000. 7,000, it means the 5, it's gone, and you lost 2,000 more. So what is your account now? The account now is only 8,000. Now, if I tell you how come you do 10 trades that are good, 5 losers that are bad, and you are down. Normally you should be up because you have 10 trades. Now, why I give you this example in general, this is just an example, just to tell you that 10 trades doesn't mean that it is better than 5 losers. It doesn't mean that. So, in order to be sure, you should see how much you make in each trade, and the other side, how much you lose in each trade. This what determines if you are a professional trader or you are a loser. I'm telling you an example is that you can make 35% winners and and 65 losers, and you can be profitable. So you ask me, how is that? How you make 25% winners, just 35%, and 65% losers, and you are winner? This is what most of the professional traders do. So professional traders, okay, professional traders make less winners, but they are profitable. Okay, so let's put them in green. It's better than red. Okay, so professional traders make less winners, but they are profitable. Now here is all about probabilities, because 35 winners, most of these winners are excellent. Now these winners, you are making money, real money. You are not making 1% trade. For me, this is not a winner. This, I consider it as a loser, because you are not making any money. How can you say you're a winner and you don't make money? Okay? So all your trades that are not making any money or little money, you can consider them as losers, because they are not good. So in order to make money, you should have your winners as big winners in order to win. But 65% of losers, they should be small losers. Small. They shouldn't be big. Now, let's go again. Let's go. Let's continue what we are saying. Is that this is one of the problems where most of the traders, they find difficulty in understanding these kinds of winners and losers. So if you want to ameliorate your performance, I understand you need a strategy to buy, how to buy stocks on time and to follow them, to put stop loss, to follow them and to exit them. This is something which is the heart of trading, but there are other things that you should work on in order to control your money inside your account. And this is one of the biggest things that you should focus on in the future. Now, if you want to make money. But some people, what they do in general, what they do is that they continue to trade and they don't check their account. Okay? They don't check. They know that sometimes they know that they are losing money, but they can't figure out what is the problem. And they don't study, they don't take a training, they don't ask anyone, and they continue to trade. Now, in general, most of these people that we say 95% lose the money, it's these kind of people. So I will just go ahead again and explain to you this. At least you have an idea about this thing. Okay, so let's go to the explanation again, and hope it will help you understand something. Now, I have told you before that one of the guys, he sent me an email, and believe it or not, he has 45,000. Okay, he is doing penny stocks. Okay, mainly penny stocks, and after let's say 1 year, his account now is $5,000. Now you can see that he is a loser. He loses all his money trading, but the thing is, when he has 45,000 and it was going down to 5,000, okay, now when it is going down like 4,000, 3,000, 40,000, 30,000, okay, 20,000, 15,000, 10,000, he has never asked the question. Never asked a question. Why? Okay? He thinks, most of the people think that it is just because they don't know the magic formula, because they think that other people or other traders you see online, they have what we call a magic formula, and if you know this, you will be making money. Now this is the big mistake, and you understand that this in general is something psychological. Psychological, what does it mean? It means that when you begin the trade and you lose money, you will be angry against the money, about the stock market. You will be mad. So what you should do, you begin to revenge. Now, how do traders revenge the market? They trade too much, and they try to find the ugliest chart, the most volatile chart, stocks that go 100% up, 100% down, and they go to this stock and they throw their money because they don't know what's going on. They don't know the scams. They don't know the manipulation in this kind of stocks. Okay? And they follow some people who ask them to buy or to sell or to do. And the thing is, they use them. And these people, since they don't know what's going on, they will be losing all their money trying. Now, if you don't understand how the stocks move or why these stocks move, okay, this is the one thing problem that most of the traders they face. You don't know. Okay? Now, for my story, for my history, when I begin to trade, now I begin to trade a little bit, to make some money here and to lose some here, and then I lost the biggest loss. It means I lost a lot, the same as everybody else. Now, the thing that you lose a lot is that you don't know what's going on. So always at that time, my question was just a simple question: why stocks move up and down? What pushes them to go up and down? Okay? So if you have clear idea why they are pushed up and down, and if there is a scam, or if there is manipulation of stocks, or if there is anything, so when you begin to understand the game, you become more careful to control your money. You don't throw your money in any stock like this without knowing how to trade this kind of stocks. Because understand, penny stocks, or big stocks, or medium stocks, every category of stocks has its own risks and its own benefits. So you should understand this kind of things. And the losers and the winners, most of the people who are doing penny stocks, for example, when we say penny stocks, it means the stocks that are small. It could be $5, $2, or $5. But even sometimes, if I tell you that the characteristics of penny stocks, it doesn't mean that it is a small stock. It can be $200, but it behaves like a penny stock. If a stock, for example, you see now in this year, after the reverse of the trend, when the stocks are moving up, okay? If I tell you, for example, Uber has doubled in a few weeks, you don't imagine that. You say, how can this stock, you double your money in a few weeks? Okay? You double your money. Although it's not a penny stock. So, Uber stock in this situation behaves like a penny stock. It behaves the same. And you find stocks that are, for example, big stocks, $100, but in a few days, few weeks, they go to $50, to $40. It's the same as penny stocks. Although they take maybe more time, but it's the same thing. It means you are in stocks that are dangerous. So, when you are in certain dangerous stocks and they behave like penny stocks, you are to get big losers. And this is the heart of the problems. It is volatile stocks. If you go to them, you should understand how do they move and how much your account will be at risk. Okay? You will be at a big risk. So you should have some strategy to deal with that. No one will tell you what to do in your account. But if you don't understand what's going on, this is the heart, this is the biggest problems in your trading account. And most of the people, they do penny stocks. Sometimes, for example, us in our trading, we have a penny stock. Now, in this Friday, we are at 139% up. But the stocks that I am doing and I show to my students are stocks that have a trend. They move slowly until they reach that. So it doesn't. It's not like stocks that they move one day up 100%, the second day 100% down. These are having some kind of manipulation, some kind of news, some kind of scams, especially penny stocks. Okay? There is some kind of manipulation. So you should understand which stock to trade, which are not very, very risky. Okay? Some stocks you can, even I find someone who tells me, these stocks are cheap. I don't lose that much. But the people, they don't understand when you say cheap. If you put $1,000 in this cheap stock, tomorrow or after a few days you lose 50%. You have lost 50% of your money. If it is big or small, it doesn't matter. So take care of advantage of this percentage. It means when you make money or you lose money with high percentage or a very low percentage, you should understand what does it mean to your money. Okay? It's not because they are small, because stocks are small, you put little money. You say, it is just, I just put $1,000. I lost 500. But it is just 500. It's not a big deal. Okay? But you don't understand that in terms of risk, you have lost 50% of your money. Who is a trader who wants to go into a trade and having the probability of losing 50% of his money? This is very, very bad for some people who don't understand risk. They don't understand percentage. As I told you just now, when I'm explaining the losers and winners, I'm telling you that some people, they lose only 2 or 3 trades, big losers, and their account is wiped out. Do you understand? All their account is wiped out. Wiped out. It's just because they don't realize that when they say 50% lost, they don't think that it is big money. But it is. Let's say if you have only $2,000, all your account is $2,000. You put it in one trade, you put $2,000 in a penny stock, 10 cents or 20 cents or $1, it doesn't matter. Penny stock. The next day you lose 50%. If you have 2,000, then you lose 1,000. You have lost all your money. Half of your money is lost. Okay? So understand the percentage. It doesn't matter how much you put in a trade. Try to see the percentage, how much you lost. You should concentrate on not to lose that much in each trade. That's why you should stay. Because if you make big losers, you cannot stay many years until you understand, because trading, you need years to understand it. It's not easy. You need to experience the stocks, to see the volatile ones, to see the lazy ones, to see when we have good years. You should see when we have bad years. You should experience all of that. Now, if you don't, you will have a problem, and you will not realize how dangerous you are, and your situation will be very, very dangerous, because you lose money and you don't know how you are losing money. That's why what I'm explaining here is just you should take care of your account. Try to see how many stocks you should have, or how many positions you should have. You should stick with these positions. Do not give too much money to one stock and then give another one little, except when it is penny stocks. You should give them little. As in our trading account, penny stocks, I give them always small positions. Why? Because they move fast, and they move fast up and down. So I want to make the risk for these stocks less. Okay? I don't want to put like in the trading account. I can put $30,000, as you have seen in my account. Those of you who have the golden subscription or trading or silver subscription, I put 25,000, 30,000 in a stock. But a penny stock, I put 3,000, I put 10,000, I put 8,000. I put less money. The reason for that is that penny stocks are very, very volatile, and whenever you trade them a lot and you don't see the percentage, you will be losing a lot of money. Okay? So I think I have told you, it's nearly 1 hour. I have told you everything. So we will begin to see our friends what they say. So Rahmatullah said, hello Karim, hello Rahmatullah. بكيتو صح عيدك البلاد وكل عام وانتم بخير. العيد مازال ما جاش، العيد غدوة بعد صلاة. Jocelyn, hi Karim, hi Jocelyn. Bakito, how are you? Fabian, hello Karim, hello Fabian. Jocelyn, he said, red eyes, my friend, do you work too much? No, I sleep too much, I have already told you. Top series, hi Karim. Is it good idea to pull out little bit of cash from your profits, or should you reinvest all of your profits in the next trade? So, profits and not profits, it depends on you. What are you doing with this trading account? Are you just making this trading account bigger and bigger and bigger, or do you need this money in something else outside trading account? For example, you have a home that you are paying very fast, and you don't want to stay 30 years, for example. You have a 30-year fix home, and you just bought it with 10 years or 15 years, and you want to you don't want to pay a lot of interest, and you want to reduce the years, you can take some of your profits and throw it in your mortgage. At least your home will be paid off very, very quick. Because the most important thing in life, I'm telling you, in life, is to have a home. Most of the people, they have problem in their life when they have no home. Okay, some people, when they begin work like 20 years or 25 years, they begin and they buy a home. After 20 years, 30 years, sometimes less or more, depending on the person, they own their home. If you own your home, at least you have a home. You are not paying any more like mortgage. You see, in everywhere where you go, you find a problem of housing. Okay? Because some people, you find a lot of people, they have a lot of money in their jobs, and they spend it all. They don't pay very quick their homes. They don't save. They just spend it. And this is a very big problem. So it depends, top series, what you are doing in life or what is your goal. You can, for example, you can it means you are making just your account bigger and bigger and bigger. This is a good thing also. Or you can think about long investment. You can have, for example, another account, and you buy companies that you think they are good and they can stay 10 years, 20 years or 30 years, and you begin to make your investing account. Because understand that they are different. Trading account is like a business. Investing account, it's a habit. It's for your, in the future, for a time when you get hit with something big. Now, as they say, if you have heard the news, I think now we are at 36 million people without jobs. Do you understand? 36 million without jobs. What does it mean? If you lose your job and you are in an apartment, they kick you out from your apartment, from your mortgage. The car you can't pay, they kick you out from your car and they get it back. So it means that if you have a saving, like an investment, you have 10,000, 20,000, 50,000, 100,000 in any plan, like in 401k or any other plan or investing account. Because understand that 401k, although it is an investment retirement plan, but you have no freedom. And they take fees. It means all your life they are taking fees from you. So that's why a lot of people, they don't do 401k, although it is a good little bit because they give you little money. But sometimes they give you just little money and they have a lot of fees. Okay? So you should, if you have some money or you can afford to have an investing account, it's better to have an investing account and put your money there. You buy companies, a lot of companies, and each money that you have, you take from trading account, you throw to investing account and you leave it. Because understand that in investing account, you are looking for dividend, you are looking for long-term thing. It's not like trading. But it's good. If your account becomes bigger and bigger, you buy more stocks, and it's very good. Advanced Trader, yes. We finished with Advanced Trader because he was bad today. Jocelyn, well, I think you are very entertaining and interesting. Thank you very much. Top series, Karim. Is 50-day high a good trend line to follow? it shows which stocks have been going up in the last few weeks. Hey, top series. I'm telling you something. 52-week high, it means it's the average of 50 days closing, and then you see where you are. But for me, I'm telling you the truth, top series, I have my own strategy. I don't do moving averages. I know, here is the problem. I know when you go online, these analysts, they always talk about, it has gone through the 50 moving 50 days. We have 100, we have 200, we have 300, we have 500. So whenever you put a day or you minus a day, the line will change. Is this what you are looking for to make trading? That's why for me, I have used them when I was beginning to trade. But when I see my strategies, I find them they are not. They don't show you anything. If you have 50, put it 100, you will have different thing. Put it 200, you will have a different line. So it means the more you put days or the less you put days, the line change. It means that this is not a real thing you can rely on. So top series, I don't use what you want to use or what you are using, or okay, I am not using that, because when you see the price, it tells you everything in the chart. So the only thing you need to understand the chart as I do according to my strategies. Okay? You should have a strategy, not to follow a moving average. Moving average doesn't say nothing. Okay? A moving average doesn't show you when there is a downtrend or there is an uptrend or there is a big bull. It doesn't show you nothing. Okay? Because it goes with what is going. So it doesn't explain anything. But for me, if I see the chart, I tell you there is a trend. It means there is a possibility that stocks will continue to go to the trend. When I buy, I make money. This is something real. And I will show you where we buy. I will show you where we sell. All these are techniques and strategies that you can assess, you can see, and you can practice. Okay? So I don't use indicators and moving averages. Never in my life. I stopped using them. The first year I lost money because of them. Moving averages, indicators. They say to you, overbought, oversold, MACD, and other stuff. These are small strategies. It can work in certain conditions in the market, but they don't work everywhere. And it doesn't give you why. Okay? Why I should buy here? For me, if I tell you buy here, I will tell you the reason why I buy here. And I will tell you the probabilities. I will tell you what I expect. I tell you if the trade doesn't work, what should I do? It means it's the whole strategy that you should learn. It's a way of doing business. It's not you put $100,000 because of a line that it is going up or going down. You put this money there, and because this line is magic. Because this line, 50-day moving average, if you change it to 100, it will be different. So who tells you to put 50 or 100, 200? Who is this person? Is it the market? The exchange? They ask you put this 50, 100 and you make money? No. So this is what I'm explaining. So top series, I don't believe in moving averages. I don't believe in indicators. I don't believe in volume. So all these three that people use, I don't use. Okay? Jocelyn Cotti said, please continue. Thank you very much, Jocelyn. Ruku said, Karim, is life going to be different after the wave of the virus? How will that change the market? Listen, Ruku, try to understand this. We have 5 weeks or 6 weeks and the stock market is doing good. But we have bad news. America here. Why you are speaking about second wave or third wave? The first wave, it's gone. The market is doing excellent for 5 or 6 weeks. You don't see that? The news that we have seen before about the coronavirus, we have about 1 month of the news. That's it. So I will show you, Roku, in order to understand the market as I see it. Because you are seeing the market because of what you are reading or watching on TV. Those people, they don't show you the whole picture. Okay? So if I ask you, what is the market doing now in this 5 or 6 weeks? What do you think it is doing? The market was excellent. Uber has doubled in a few weeks. Uber, it was 15 or something. It goes to 30 or something. It doubled. And you are telling me about virus and virus. Another thing I'm telling you. What do you think about the news about coronavirus? Is it going good or bad in America? It is going bad, right? Each day we have new cases. Each day we have deaths. The toll of our deaths and our cases, we are the first in the world. But why our market is doing good? If I ask you why the market is doing good in these 5 or 6 weeks, what is the relation? Because the stock market doesn't care about this coronavirus. People are making money. We in our trade, we are 43% in this 7 or 8 weeks. 47%. No, not 47. 43% on Friday. And you are telling me the second wave, the third wave. Where is this wave in the stock market? So, Roku, focus on what's going on the stock market. See what's going. See the prices. See where the market is going. Do not watch too much TV because they misled you into other things and they show you things that doesn't exist in the market. The market is clean because the market is price. There is in the stock market, the price is speaking. I will explain this, Ruku. Maybe you get an idea of what I am speaking. Okay. So let's make two things. Now here is the media, and here is the stock market. Okay? This is just an example. Now, so if you see, for example, since we are speaking about let's say since we are speaking about coronavirus stall, it means in America here. Okay, so let's say we can begin from one case, I think this in the end of January 2020. Okay? In the end of January, we have only one case. Now, it's going now. I think now it's 1,250,000. I don't know. I don't see the exact number, but I think it's 1,250,000 or more or less. You can check that, no problem. Now, and then you see, for example, I don't know the deaths right now. Let's say we have 100,000 deaths. Now, okay? There is an uptrend of bad news. Okay? You can see that. Uptrend. Now, all these, from one case to 1,250,000 cases. So what's this? This is bad news. Okay? This bad news continues until now. But in the stock market, it goes down, but in 6 or 7 weeks, it's going up. Now we are in uptrend and the market is good. The market is good. I'm telling you, right now. So where is this good from the bad news? Where is it? Can you explain that? Now, stock market, when we say here good, is just because the price speaks. The price speaks. Okay? And here, the coronavirus news and the media, here we have people speaking. Now, people speaking, they show bad things happening. Yeah, another thing about the media. They say we have 36 million jobless. What does it mean? It means just a few months, 2 months or 3 months, it was only 3 million who have no jobs. Now it is 36 million. Where are we going? It means all these, by the media, it is bad news. Now I ask you the question. Why the stock market is doing good? Can you tell me the reason? Okay? So, from what I explained, okay? Can you think about the difference between stock market and between the real world of coronavirus, of unemployment? The government is giving help for everybody. They give money, they help the paycheck, they give you, I don't know. So all these things, millions of people, they stop work, millions of people, they get laid off. We are into a crisis, a big crisis. 36 million without a job. You understand that? They were working and then they lose their jobs. But why the stock market is going up? Because you don't understand that there is two different things. Stock market is not the real world that you are living in. It's virtual. It has its own rules. Now are you in the stock market to speak about coronavirus or to follow the news of unemployment? Are you here in the stock market to deal with the economy things, or are you here to make money? This is the main thing you should ask yourself. Now, if you said, for example, no, I am here in the stock market to make money. So, if you are here to make money, why you are putting all this bad information into your head? This will discourage you from trading, from looking well into the chart. For me, for example, for our trading account, we are now at 43% in this 7 or 8 weeks. When we have the here. Okay, in this uptrend, now we are at 43%. Any one of you guys, you can enter to golden subscription, the subscription, or silver subscription, and you can see what we have now. 43% up. We are here. We are making money here. Do I care about 36 million unemployment affect the market? No, it doesn't affect the market. The market is still going up. Because we are making money from stock market. I'm not making money of people who are working in jobs or losing their jobs. Do they give you money when the people are going to work? Do they send you money to stock market? And because you bought some shares of a company, they send you money from the real market, from the real economy? Do they send you something? Even if it is the good news and there is no coronavirus. There is no coronavirus. Does the market will be going up? No. Coronavirus is just news. It's the coronavirus here. All this information that you see on the left side, this is the right side here. Okay? What you see is this is about the real economy. Stock market, it is not the real economy. It's the virtual life. It's the virtual world. People, they make money without going to the job. They don't go, like when you say 36 million lose their jobs, they lose it in real. It means people who are doing some kind of job, they go transport, they go to their jobs, they do, that's why they get laid off. But people who are traders or investors, they never lose their job. First, they don't lose. They can lose money, yes, but they never lose their job because they are in the stock market. Have you ever heard that the stock market stopped working? No. But companies now, they stop working because they have problems. So if you want to make money, what you should do? You should live in the stock market. You live here. You do your business here. Do not take this information into your trade because it will spoil. Okay? It will spoil your trading. So this is just some information, guys, that I want to tell you, and I always try to explain as much as I can these facts about stock market and coronavirus and the other thing. Now, for me, you said, Karim, is life going to be different after the wave of the coronavirus? Now, if there are good news, it makes the stock market stronger and stronger, yes. But the market is now strong. With the bad news, it is strong. So you understand that the people who are moving the market, they are not the people who are moving companies. For example, Warren Buffett. Okay? Most of right now, all his stocks is moving up and he makes money and so. But he doesn't care about, when some companies they lose, or the people they lose business, except when he owns a big chunk of the company, or he owns the company itself. So this is just to make you sure you understand what I'm saying, okay? Go ahead, you say, hello, I lose 100. What? Go ahead, you say, I lose 100%? What did you do to lose 100%? Okay? You put all your money into a company and they go bankrupt? Or you bought options and you lose all the options? This is two things I can imagine. Or you do gambling. Three things. So go ahead. Please explain how did you lose 100%? I don't understand because it's not that normal. Now, Roku said, can you look at Avia? What's the meaning of strategic partnership for a professional trader? Now listen, Roku. What's the thing you are talking about? Are you talking about stock that it is called partnership? LP, or I don't know what is it? For me, I don't see like that. Okay? So let's see Avia. Let's see the chart. Let's see the chart. Okay. Now look. This is a stock. You said it's partnership or not partnership. Okay? What does it matter? Then what is a partnership, or this company making sugar or making coffee, or it is energy, or it is transportation, or it is anything else. So Avia, let's explain something that I should explain. Okay. Now, look here. In order to understand how I trade Roku, you try to understand. Now, in our account, in our trading virtual account that we have with our guys, trading account, we have now 15 stocks. Most of them are winners. Most of them are making money. Most of them. Now, when I go to buy a stock, I search, I find stocks like this: XYZ, ZMT, EXO, MFR. No, this is just fictitious, okay? They are not true. OOT. No, for me, I don't care. See, here's the thing. Here's the thing you can understand. I don't care what these companies are. Okay? Put it in your mind how I trade. I don't care what these companies are or what they do. 1, 2, 3, 4, 5, for example. 5 companies. Now, what is the thing I care about? The thing I care about is the stock here. I bought it at $20. It goes to $30. Okay? I care about profits. Okay? About profits of these companies. Let's say it goes from 20 to 30. Let's say I make 50% of my money as profits. So this is what I care about. Now, another example. Let's say this company goes up and go down, so I sell it. Do I care about this company? What does it do? No. Do I care about what this company is doing or making? I don't do. So please, okay? All my stocks, 15 stocks that you see, I don't care what they do. I don't care what is the thing they make as products, or they sell, or they buy. Even if I know the company name, it doesn't, for me, even I don't search what does it mean XYZ. When you tell me, for example, Avia, the stock Avia, you send it to me. For me, Avia, I am going to look to the chart. What does it do? I don't care about this company if this company Avia, okay, if this company Adhere is doing like what does it do? It was in a downtrend, then it goes to an uptrend. This is what I am interested in. Now, if it is a partnership, or it is making sugar, making coffee, or making planes, or making cigars, or making whatever, this doesn't affect me, because I am not an executive in this company. I am not making money from this company as executive or so. Do you understand? So hope my explanation is very, 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 very clear. So you are, I know maybe you are reading a lot about what the company do, what the analysts say, what is their future, or you go to a prospectus and you look at 10 years what they are doing, how they make the people life better. You know, you are in another world. You create another world. You are with entertainment business. You are watching too much. You are reading something that it doesn't help you in trading. For me, I'm telling you that all these companies, I don't see what they do. I can see, yes. Okay? The company where it belongs, for example, it belongs to drug sector, to biotechnology industry. Yes, I see that. But other information, I don't need. Even the name of the company, I don't need it. I don't need it. I need only the ticker and the chart. If you, for example, you hide everything from me, just bring me the chart, bring me my search, and show me only the ticker. I will still make money as I do before. I don't care. You are mixing investing with trading. That's why you have a problem. You say strategic partnership. What does it mean, this strategic partnership? The company, what it does, it doesn't affect me. I am not interested in what they do. I am interested in the stock if I can make money from it. Okay? Walmart is one of the biggest companies in the world. It makes a lot of money. But its stock is still on 100 something. But it is one of the biggest companies in the world. But the owners are making too much money because, let's say this Walmart family, one of the guys is making he has 26 billion or 30 billion. He is a billionaire. But you, if you buy 100 shares, this billionaire doesn't send you a check. Each month or each year, they say because you own the shares, take this check, 100,000, 200,000, because we have made profits. They don't share their money with shareholders. They share tiny thing, which is what we call dividend. Dividend is just a tiny thing of a company. And it is taken from the price. It's not a check. It's not a check that comes to you. Okay? It's taken already from the price. And because the people, they don't understand how this works in the stock market, what does it mean, this dividend? What does it mean, shareholder? When you are, for example, you can make money from a company without buying its shares in the stock market. For example, if you work in a company and gives 401k, and they match, for example, 100% or 50% in your contribution to the 401k. You put 100, they match 100%. For example, they give you 100. This 100, it is the profits of the company, but you don't own any shares. It means that you are making money without being in the stock market. You don't own shares. Executives of Walmart, they get millions of dollars each year because of their job, not because they own Walmart shares. So you should understand what's going on, because I think Roku, I think you are still mixing investing with trading. If you don't separate them, you will always lose money in trading if you include investing. Investing, it's a long run. You invest in a company and you think that in 10 years, 20 years, 30 years, it becomes bigger and bigger and bigger, and the stock becomes bigger and bigger and bigger, and you make more dividend, more dividend, and more dividend. This is investing. Trading is now. I want to make money now. I don't want to make money when I am 70 or 80 and then I have money. What do I do with this money? If you are 80, like Warren Buffett, or he has 70 billion, 80 billion dollars, but he is old. He can't run. He can do things as he was young. But he was lucky that he has money all his life because of his investment, because of his work. And he has a better life than some other who are poor. So you understand that trading is for now, investing for the future. So you should separate this thing. Now we want to make money. This is trading. If you want to make money in the future, like 10 years, 20 years, 30 years, retirement, think about investing. You should, even if you have an account and you are doing both, you should make 2 accounts. I'm telling you, Roku, I'm just giving you a suggestion. You should separate your investment from your trading. Trading is you buy. If the stock goes good, you stay. If the stock doesn't go good, you sell it. You don't stay with the loser, because it will take all your money, thinking that you are, in the future, it comes back. Some stocks never come back. Some, they go bankrupt. Hope Roku is clear, this thing. Roku said, trading isn't only charts. Okay. Roku, I'm telling you something. I give you a suggestion. Go to try to do only 1 month for my subscription, either silver or golden. Check each week I make a video. I will show you what I sell, what I bought. Check these 8 weeks. We have made 43% up profits. I don't see anything than the search and the chart. Are you going to tell me I'm at fault? Even if I am at fault in your opinion, I am making money. I don't care about your opinion. You think that in order to trade, you should go search for other information. I don't. And I'm telling you from now that if you continue this, you lose all your money searching. That's why you are just online. You are just wasting your time. You are doing entertainment. You think that when you go to a company and you get some news, or you saw like as someone told me before, some press release, you will be making money from the stock. You don't understand that the company is not the stock. The stock is something else. The people who move the stock are traders and investors. They are not the company itself. The company doesn't move the stock. I give you a concrete example. Let me go give you. Okay. Now let's show you Walmart. Walmart is 124. Okay? Walmart is one of the biggest companies in the world in terms of profits. It's one of the giants of the whole world. Okay? This is their stock. $124.33. Okay? Now, can you compare it with, for example, Tesla? Who is making more money, Tesla or Walmart? Tesla is $816. Okay? 816. Walmart is only 124. Why Walmart doesn't go become bigger and bigger and bigger than Tesla? Although Tesla is making less money than Walmart. Okay? Are you looking for the price to make money, or are you looking for the company itself? So this is something that you should think about it. I know some people who have bad ideas about the trading, they will never make it. Now, I have made last week why some traders never understand trading. Please, Roku, go to last week live. If you have time, try to watch until you finish it. It's 2 hours something. So watch it little bit and put notes. Now, if I say something wrong, you should prove it to me with a trade. For example, you know something about the company and you make money. Send me this trade that you have done when you know something. This before it's called insider trading. Insider trading this is before 1934, before when we have the crisis of 1929. Before that time, people, they were using insider trading. Do you know what does it mean, insider? For example, you know a CEO or an executive, and he will tell you the earnings is next week. Our earnings is excellent. The EPS, the earning per share, the guys who are analysts, they say we make $2 per share, which is the EPS. Now we have made 10. Now, if you know this information, you can put all your money, you borrow money, you sell your house, put it in that stock. Now, because it is so good, the people, the day traders, when they see that it is so good, they buy too much and they sell, and we have a gap up. So you will have 50% or 60% or 100%, 200%, or even 400%. This is what we call insider trading. Insider trading is forbidden by the law. You can't do that. But what is online now, it is a public information. If you go to a company, you find the earnings, the past earnings, you find the information, you find everything, you find press release, you find what they do, what they prospectus, what they do in the future. But all these will never help you make money in the stock market. If you have made a trade, just send me an email and just show me. I have known this, that's why I make this, and I will prove to you that you are wrong. I will prove to you that it is wrong. Whatever information that you have and you make money, I will prove that you are wrong. Okay? That's why for me, I'm giving you the proof that I don't see any news, anything, and I am making money. You can check that. You can check that. It's in my silver or golden subscription. It's not going anywhere. You subscribe, you see that. You take all the weeks, 6 weeks or 8 weeks. You see what I bought, what I sold, what I bought, what I sold. You find 43% up. Okay? I don't know anything about these companies. Even if I buy it, even if I know the company from like that, I don't care if I know it. I don't search what the companies are doing. Except when they belong to an industry or sector. Yes, I see the sector, I see the industry. But this doesn't make me money. Okay? Okay. So, Roku, try just to focus on this. Try to put notes. try to search. If you find something, send me an email and we can speak later. Daniel said 401k company matching is good. Yes, they match, it is very good. But, which is very good, they match. But see how much fees they take from you. And the company, how much they give. If you put, for example, 100, okay? I will give you an example. Because you should, Daniel, you should see an example to understand. Okay. Let's say now you have 100k 401k. It means 100,000 is your account. Okay? Let's say in each paycheck you put $100 and they match $100. So they put in each paycheck $200 and in 1 month it will be $400. Now I'm speaking about this money that they give you. They give you 200. They give you 200 for each month. $200, right? This is what they match. Now 200 by 12. You get 2,400 as matching. It means the sharing. It means what the company gives you. 2,400. Okay. Now, if the fees are 3% in your account, so the money that they give you is gone. Because the money they give you, it goes to the other guys who are having the 401 to manage it. So your money that they give you is gone, and they take 600 more of your own money. Okay? They have already taken $600 from your account. And it will happen each year. Now, when your account is 200,000, they take 3%. It means they take $6,000 a year. If it is 1 million, if it is your account is 1 million, they take 3%. It means each year they take $30,000 from your account. So this is what I'm speaking about. $30,000 from $1 million, they will take it from your account. These are fees. You can't see them. They are taking all these fees. Okay? So this is just an example, man, just to show you that you should see. And another thing about 401k, this is for everybody. Yes, you should do it, but I'm not saying you shouldn't do it because you don't have a choice, because you don't know how to invest, you don't know how to put an account, you don't know how to trade. Yes, this is a problem for most of the people. That's why. But 401k has a fee. It's not for free. If you ask them, I will tell you the truth. Here is an example. I will tell you another example. Okay? Now, let's say they make a new 401k, a new plan. Okay? Where you put 100. This is what you put. They add 100. It means they match 100%. You have 200. And in your account, they let you buy stocks. No mutual funds. They put mutual funds. For me, if they put stocks, I will buy all my money. If I have $100,000, I bought stocks. I will never buy mutual fund. Never. Do you know why I tell you this? Because stocks have no fees. Do you understand? No 3% or 2% or 5%. No fees. It means this 3,000K that the guys for now they took it, it will be 3,000 here. Next year it will be 6,000, 9,000, 12,000. So your account will be going quicker and quicker and quicker. Second, mutual fund is the average of the stocks. But when you buy stocks, if you have better stocks, they can go more than the average. It means you will be making money better and faster. For example, now, for our account, it's 10,000, 100,000, our account. Now we are at 143. Okay? But if you bought mutual funds, it will never be 43. Even if it could be 2,000, 3,000, 5,000. But never 43,000, because this you need stocks, not mutual funds. Okay? Le Monde Blanc said, is virus real? Oh, you mean coronavirus? We have, I think we have 100,000 dead, they say, about virus. So if it's not true, I don't know. I am not a doctor to answer this question. But people who go there and they get killed, they say it's virus. So I don't know. So you should see with a doctor. Le Monde Blanc said, or something is created to manipulate brains and markets. No. Listen. You are speaking about coronavirus and the news and it's true or not, or Illuminati or conspiracy of the world. So I am not, my channel is not about this stuff. My channel is about, you go to the stock market, you put some money, you trade, you make money. That's it. I don't care about virus or not virus, or people that get killed or not, or it's true or it's not. What does it do for me? If I know, does it change my situation? Does it change? Does it make me better trader if I know that the virus is true or not? It doesn't. So, Samuel Daniel, I hate to disagree with you, but you are wrong. The Dow Jones was almost at 30,000 mark, and now it is at 24 mark. Sure, it did rebound, but still way below. Okay. Let's speak about Dow Jones, since you are speaking about Dow Jones. Okay. You say it was nearly 30 and now it's 24. Let's go to the chart. Okay. Okay. Dow Jones 29,500, 29,690. Okay, let's say it is 30,000, okay? No problem. 30,000 and it go to the low of 18, now it's 24. Okay? From 18 to 24. Now, here downtrend, here uptrend. Now my question to you, are you speaking about trading or are you speaking about investing? Investing, you should see this. Okay? See this. This is a yearly chart. If, let's say we begin with 1,000. Here is Dow Jones. In 82 was 1,000. Now it is 24,000. Are you speaking about investing or are you speaking about trading? If you are speaking about investing, you don't see one by year by year. You should see the investment that you have from where you bought and what is now. This is investing. Investing, you should not see the year, if it is down or up. Because in 2018 it was bad, in 2019 it was good. Okay? So this, you should not see the 1 year by 1 year. Because most of the time the yearly is what you see investing. So this is investing. You should not see 1 year and you say, oh, it was in the high and now it is in the low. This is not investing. Okay? Because you didn't buy in the you didn't buy, let's say in the day. You didn't buy in 12 of February, and now we are in 23, because 22 is Friday, 23. Here what you are saying is, let me see. Sam Daniel, to sum it up, you are speaking about investing. We are speaking about trading. I don't buy from the top and let it go down, and now you tell me you are at 24,000. We don't do that in trading. When the market is going down, we short sell in order to make money. So you are confused. I don't know. You don't know the difference between investing or trading, or you mix them. What we do here, what I'm speaking about in this session, we are speaking about trading. That's why I always say losers and winners. I'm not speaking about companies' investment, because in order to say winner or loser, you should stay 10 years, 20 years in order to see if you are winning or you are losing in a company. It takes time. That's why we are in trading. So, Sam Daniel, when you are watching all this session, nearly now we are in 2 hours, you should think always about trading. We buy and we sell. We don't buy from the high and sell now. Let's say we buy at 30,000 and we sell at 24. We lost money. This, who will do that? Who will do that? Who will let its stocks going down, and let them like this? Who? It's not a trader. This is an investor. An investor, because when he buys, he's thinking about 10 years, 20 years. He's not speaking about this year. 2000, for example, 8 was bad. But the other years were good. So no one cares about 2008 because the other years are good. So you are making money. Okay? So Daniel, try to see that. Top series, the question is, how much stop loss to put now? Top series. It's not a question. It's a training that you should get and you should understand. You want a magic formula. There is no magic formula. There is, for example, if you go to training level 6, how to protect your trades, and training level 8, how to manage your account, I will show you how much you do as percentage or other ways, because there is no only percentage. There are other things that you can change into percentage. Now this you need a training. No one will tell you, because if you go online, they misled you. They will show you one thing, and because they don't trade, they miss the other things they don't know. So managing your account and putting your stop loss are two different things. So putting your stop loss, it depends. It depends on many things. Okay? So it's not one thing that you should put. If you put one, for example, if you put 1% to all your stocks, most of your stocks will be losers. Most of them. Why? Because your stop loss is very tight. If you put 10%, you will stay with stocks a long time and you are not making any money, which is a bad thing also. So, in order to know how much, you should get a training. So this, I can't explain. Even if I can explain, it takes me 2 hours because it's training. You should see things. You should see why you do this, why you don't do that. There are rules that you should apply in order to do this. But if you want to go online and to read an article, do 1%, do 5%, do 2%, those guys, they will never know what they are talking about, because most of them, they are not traders. They don't trade. That's why they want to give you something easy. But something easy, it doesn't solve your problem. You should get a training. Go Al-Haq, he said, I am a greedy man. Yes, I know you are a greedy man. That's why you lost your money. You are a gambler. You are not a trader. Sam Daniel said, never put stop loss. Use options for insurance. Use options. Now when you go home, try to do this. Okay? Try to calculate how this will work. You have a stock that it is $100. Now it is $2. See how much you lost in 5 months or 6 months or 10 months. Try to see how much money you put as contracts, as put contracts. See how much money you make. You will end up losing all your money, even if you put options. Okay? You will do that. You are speaking about hedging. Hedging is mutual funds they do, because they don't care about the money. Even if they lose all these options, they don't care. Because they are staying 1 year, 2 years, 5 years. They are investing. They are not trading. A mutual fund, they don't trade. He doesn't buy today and sell tomorrow. It's forbidden in his account. He should leave stocks more than 1 year. He is an investor. That's why when the stock market is going down, he buys puts. But this is just to make the loss less, not to eradicate loss. The loss, he will get it, but it will be just less. Okay? Daniel said 3% is extreme. No, it's not extreme. There are some stocks you put 10%, some stocks you put 1%, some stocks you put 5%, some depends on the stocks. So 3 is not a big deal. Because 1%, where have you seen 1%? 1% are the stocks that are very, very, very slow. No stupid person trader is buying 1% loss stocks. No. And if you go home, Daniel, send me stocks, show me a stock that you buy and put 1%, and I will tell you that you are wrong. You will be always wrong. And all your trades will be losers. And the way the stock moves is so slow that you can't make money. 2 months, 3 months, 5 months, it goes 5% to 6%. This, we don't like it here. We don't like stocks to wait 2 months or 3 months for 5%. We are not looking for interest rate. We are not doing bonds. Buy bonds is better. You buy a bond, you have 7%, 6% a year, that's it. Why you are doing trading? Okay? Okay. Ramin Alazov said, hi Karim, would you buy KGC in May 14 or 15? If yes, what would be your stop loss? If not, why not? KGC. Ramin Alazov. $14 or $15. let me see. KGC. Okay, so let's go. So you said, Karim, would you buy KGC in May 14 or 15? If yes, what would be your stop loss? If not, why not? Okay, let's go. Where is 14 and 15? This is 14. Oh, no. Where is 14 and 15? 14, 15. For me, 672 could be my stop loss. But understand, when I put here, let's say I put it here, where is 15? 14, 15. Okay, 14, the price was 720, 744, and here it is 60.72. Now, as you can see, I put it here, but in the way I do business, I am not going to buy according to what you buy. This is the thing I'm telling you. So when you buy a stock, okay, first you should have a reason why you buy the stock at that price. Okay? Now, for me, I have other criteria to see in order to put stop loss. So it's not easy. It's not just any stock I put stop loss without knowing, does it go with my strategy, yes or no? Has it a probability to go up, yes or no? There are other criteria that I should put in order to know where I put the stop loss exactly. Okay? Anyway, if the stop loss is too much, you should take it down. It depends on you also. You are the one who, it's your money. So you should put the stop loss where it is good for you. So there are a lot of criteria that I use, a lot of things that I use, and I know. Ramin Alazov, I don't know if you have bought my training level 6. I don't think that you have bought training level 6. So you should study training level 6. You should study training level 8 to understand the game of stop loss. Stop loss, it's not percentages just you throw there and that's it. No, it have a lot of criteria you should see, and then you can decide. Because a stock, you can put 5%, another stock you put 10%, another stock you put 2%. It depends on many things. So as I told Ruku, I am not going to explain this because it's a training. Okay? You said you pay commissions. Now most of the brokers have stopped paying commissions. Most of the brokers. I don't know why. Both actually, the effect of the virus is clear. Hey, yes, Sam, Daniel. You said the effect of the virus is clear. It's the news, not the virus. The news. But the news is too bad this month, these weeks. All the weeks are bad. So why the stock market is going up? Go and search. Go and search. Saba S said, you are a very good teacher. Thank you very much, Saba. I'm trying just to help as much as I can. Try to explain as much as I can. Some people, they don't believe. So I can't do nothing. As they said, you can take a horse to the river to drink, but you can't make him drink. This is the proverb they say. I don't know if it's true or not. Yeah, I can just help and show you the way. But if you resist and you say no, it's no. So you stay where you are. If you are making money with your strategy, it's good also. But most of the people, they are struggling, they are losing money, and they try to argue again. This is too bad. You can't argue when you are losing money. When you make money and you have strategy, solid strategy, yes, you can explain. You can tell me this and this and that. Okay? KW, it's all KW. What about if I put stop loss, losing depending on the 7th moving average? I don't use moving average. 7 moving average could be too much. 7 moving average depends on the days. So sometimes there are days that the stock goes down a little bit. Sometimes they go too much. Okay? So I don't use moving averages for my stop loss. I don't. I have my own strategy. I have my own explanations. If I tell you I put here, is because I have criteria to see. Okay? Ramiz Alanov, 14 and 15. Yes, I see that. 14 and 15. Yes. I know. I showed you 14 and 15. Yes. Top series are rates good investment for long-term real estate investment trusts? You know, most of the people, rates, I have made a training about them, which is, there are some rates that are good, some they are bad according to the tax. So you should search. But understand that for me, if I want to buy, I buy stocks with dividend than to buy rates. It depends. If the rates are moving slowly, they are not for me. For me, I'm looking for companies that they can go good in the price and in the dividend. Two things. But this is related to investing. There are a lot of criteria that I have. I have my ebooks about investing. I put a lot of criteria. You can see, you can check them. Ramiz Larov, what about if I would buy option contract on the 14th May? But why you are speaking about 4th May or 15th May or the other way? So if you have, I don't give suggestions where to buy the stock until you have my own strategy. If you have my own strategy, you should send me an email and we can discuss that. Because if you are taking my my training, we should discuss this in private because it is a private thing. Okay? Saba said, would you explain more about trading is not magic? Is math? Now listen, Saba. Now it is 2 hours 13 minutes. I should stop at 2 hours. So I am getting 30 minutes more and I have my throat begin to hurt. So what I'm saying in my video about trading is math, it is not magic. It means people who are looking for a magic formula, it doesn't exist. It doesn't exist. People, they want just something, to know something, and then they begin to make money. As if you are going to print money. You buy paper for the money, and just you print them. And then you become rich. This is not trading. Trading, you should learn. When I say math, I mean calculations. It means everything in your account should be calculated. The shares, the positions, the stop loss, everything should be calculated according to your criteria. When something goes wrong, you are not, for example, you are not making money in 1 month or 2. You should see what's the problem. That's what I mean by my video. Trading is math, it's not magic. Because a lot of people, I have seen people who lie over to millions of people. They say, okay, I can show you how to make $100,000 from $100. I have seen it in Facebook, in YouTube, and these guys, I don't know how they keep lying like this to the people. But still, I'm telling you, people, they believe in them. Because people, the guy who put $100, because they know that there are millions of people, they don't have money at all. So they tell them 100, you can make $100,000. You can find these videos and you can see them and you can ask these people. Ask the people, ask him, okay, I give you $10,000. I don't need $100,000. Just in each month, double it and send me $10,000 each month for life, and I will stop working. And you do the job and take all the money after 10,000. You take it for yourself. These people are the biggest liars on YouTube and Facebook. But you know, this is what they do. People, they believe in them. That's why we have a problem. Okay. So guys, thank you very much for being here. Thank you very much for asking questions. And we have 2 hours 16 minutes. I can't go more than that. I'm very tired right now. So as usual, this video is very long. I always cut it into 4 and I put it this next week like 30 minutes or 35 minutes, because some people, they told me you can cut it and we can watch each day half an hour, and that's it. Okay. So this is just to make it easy for you guys. For those who want to watch it all, you should thank you very much, Top Series. Every subject I do, it is very, very important to make money. But there are some people, they don't understand the answers or when I'm explaining. So when I explain, it means this is just the basics I'm telling you. But in my training, I give more because, you know, you pay for it. Okay? So thank you very much and see you next time. So Jocelyn say the horse will drink when he is ready. Good night. Yes, but the problem is that he doesn't drink and all his investment is lost. This is what I am meaning. Thank you very much, guys, and see you next week.